In today's lesson, I'm going to look at the characteristics of each of the three major money centers where the majority of foreign exchange transactions take place, as well as the characteristics of each of the 3 8-hour trading sessions which make up the 24-hour trading day. So let's get started. Unlike the futures and equities markets, the foreign exchange market trades actively 24 hours a day, with active trading hours following the sun around the globe to each of the world's major money centers. As the foreign exchange market is an over-the-counter market where two counterparties can trade with each other whenever they want, technically the market never closes. Most electronic trading platforms, however, open for trading at around 5 p.m. Eastern Standard Time on Sunday, which corresponds to the start of Monday's business hours in Australia and New Zealand. While there are certainly banks in these countries which actively make markets in foreign exchange, there is very little trading done in these countries when compared to other major money centers of the world. The first major money centers are open, and therefore the start of the first major session in the Forex market is the Asian trading session, which corresponds with the start of business hours in Tokyo at 7 p.m. Eastern Standard Time on Sunday. While still considered one of the three major money centers, only 7.6% of Forex transactions flow through Tokyo trading desks, so the Asian trading session is the least active of the three. While there's active trading in yen-based pairs during the Asian trading hours, the market for currencies outside yen-based pairs is relatively thin, making Asian trading hours a time when the larger banks and hedge funds in the market will sometimes try and push the market in their favor. Next in line is the European trading session, which begins with the start of London business hours at 2 a.m. Eastern Standard Time. While New York is considered by most to be the largest financial center in the world, London is still king of the Forex market, with over 32% of all Forex transactions taking place in the city. Before the euro, there are more than a dozen additional currencies in Europe, making foreign exchange part of everyday life for both individuals and businesses operating in the region. In addition to this, London is situated perfectly from a time zone standpoint, with business hours for both large Eastern and Western economies taking place during London trading hours. As London is the most active session in the Forex market, it is also the session with the most volatility for all the currency pairs which we will be studying in this course. Last but not least is the U.S. session, which begins with the start of New York business hours at 8 a.m. Eastern Standard Time. New York is a distant second to London in terms of Forex trading volumes, with approximately 19% of all Forex transactions flowing through New York dealing rooms. The most active part of the U.S. trading session, and the most active time for the Forex market in general, is from about 8 a.m. to 12 a.m., 12 p.m., when both London and New York trading desks are open for business. You can see very large volatility during this time, as in addition to both New York and London trading desks being open, most of the major U.S. economic announcements are released during these hours as well. The trading day winds down after 12 p.m. New York time, with most electronic platforms closing for business at around 4 p.m. Eastern Standard Time on Friday. That's our lesson for today. In our next lesson, we look at the main currencies of the world, which you will be learning to trade throughout the rest of this course, so we hope to see you in that lesson. As always, if you have any questions or comments, please feel free to leave them in the comment section below.